So this is where we'll start today. This is module 3. Okay. And we are reading about agents and institutions of corporate governance. We have read about board of directors, then auditors, and then shareholders. Now we are reading about shareholders. And there are two types of generally shareholders who are, one is equity shareholder, who are the main stakeholders with voting rights, and another is preference shareholder who have no voting right, but they get a preference while deciding the dividend, and they get larger dividend than the equity shareholder. The number of shareholders in a company depends upon the type of company which they are opening. This we have read, I think, yesterday. For one person, proprietary, and then private. For private limited company, at least 2 directors are required. It can be more than 2 also. And for public limited company, minimum 7. What are the rights of shareholders? They can participate in AGM for appointment of auditor and election of directors. That election of directors or appointment of directors and reappointment of directors, whatever may be the agenda. So, sorry. Then they can appeal to company law board with an application for convening a AGM, and there the AGM, if suppose a company doesn't hold AGM in time, then the shareholders can approach CLB, company law board, to make the company held the AGM, because AGM is the one forum where the shareholders can really exercise their power, because there are certain issues to be voted, like dividend and others. And they can also approach the company law board for investigating into any of the company affairs where they feel, if they feel that something is going wrong, because their money is at stake. So that power they have, that right they have. And then I think in the role of directors, we have read that 10% of the paid-up capital shareholders, if they write to the directors to call for an EGM, extraordinary general meeting, then also the director has to do that. So that is another power given as per law. Then participate in declaration of dividend. Demand poll on any of the agenda point, if they feel that something it is not as in their best interest, so that they can do. And petition to High Court for winding up the company. If they see that the company is making loss and it is high time that the company should be closed, they can do that, because by winding up, they can even recover some amount of their money. May not be full, but some. Participate in surplus assets of the company while winding up. If there is a surplus asset, it is, because equity shareholders are the last preference. Preference in why they are the last one to receive anything when the company goes wrong, is liquidated. The creditors, the operational creditors and all, they are the first one. The bank loan, the loan given by the banks and all are also had also the best preference. The equity shareholders are the last, because they are the owner. So they also have to bear certain losses if the company doesn't perform well. So that is why there are certain rights, and they should ensure that the company should run well. But in practicality, these are all points where the shareholder doesn't have much say, and they may lose money. And there are instances where shareholders' money has gone. They have lost money by investing in bad companies. They can ask for copies of documents, and the company is bound to give that. There is the company cannot deny. Generally, this is given or shared by the company without asking. But if suppose some company is not sharing, then the shareholder can ask for. They can also ask for certificates within 3 months. Earlier it was physical form. I don't know if you have seen. There were certificates printed and given. That was being traded. But nowadays it is electronic form, dematerialized form. So, but it has to be issued in your name. So this has to be, this should show in your demat account that this much of a share of this particular company is available in your demat account. So if something is not allotted, then you have within 3 months, then you can take up with the issue with the company secretary of that company. If they don't comply, then you can go to court to approach CLB or whatever. Transfer of share. When you sell a particular share, this should be transferred. Actually, nowadays, the shareholder need not do anything because the stock exchanges and the trading platforms, they are made responsible for doing all this. So generally, it is done automatically. Appeal to CLB on various issues as pointed out earlier. Preferential right on purchase of shares. Now suppose.
Sir, what is CLB?
Company Law Board. In the last slide also it was there. So Company Law Board is a short form is CLB. There is a statutory body, okay, who looks after the various issues of functioning of companies. Then preferential rights on purchase of shares. They can ask for certain rights when they purchase share. And if it is a preferential share, then automatically they get, but otherwise also they can demand depending on or suppose there is a merger and acquisition, then in the new company, they can get something by ownership in the parent company, they can get some share or something like that. So wherever there is a requirement, that, but if when the two companies, one company is acquired by another company, the shareholders of the company which is acquired by the owner, there they get some share in the owner's company. If they don't get it, then they can approach but depending on the various financial and all, the company decides, and the shareholders can protest on the ratio which is being done, but generally it is not done. Participate in meetings. Every AGM and EGM, you get a notice. If you are a shareholder of a company, you get a notice to participate. Nowadays, you can participate online. So wherever you are, you can log in and you can cast your vote. You can be present there. Inspect and obtain copies of minutes, copy of statutory report, annual reports of directors, annual accounts, and auditors' report. Obtain copies of document, that's the same thing. They can get that. When any material of any company is sold, then the shareholders should get the amount which they are entitled to receive because they are the owner of the company. Assets are in their name, in the owner's name. So every time, suppose assets are being sold, then they should get some money over. But it is not necessary that every time asset is sold, the company has to pay the shareholder. They can reinvest that and inform the shareholder. That is there. But generally, they have the right on the assets of a company. When a company is converted into another company, then it requires prior approval of shareholder. Also, all the appointment has to be done according to all the procedures, and also auditors and directors have to be done. So, appointment of auditors means now suppose a company is converted into another company. They are changing their objectives or article of association and memorandum of association. They want to get into different business. All that will require approval of even that change, and also then appointment, reappointment of auditors and directors. Everything has to be done with the approval of shareholders. The right to approach the court in case of insolvency. When the company is going to insolvency, they have the right to approach court for getting their compensation. Where from these rights of the shareholders comes? It comes from Indian Companies Act 1956, which is now 2013. Then Indian Contract Act 1872. Why is Contract Act is applicable for such rights of the shareholder? Can anybody say something? How is Contract Act help the to ensure rights of shareholders. What is a contract? Any idea?
An agreement enforceable by law.
But what does that agreement do? The agreement is for what? It is enforceable by law, is a contract agreed. But what that agreement does? That agreement is for?
To sell anything?
Even for some work also. To sell, to work, to do, like when you are awarding a contract, when we say that we have awarded contracts of rupees this much of crore for a project, what does it mean? You appoint or you award or you get into an agreement with some group companies and others to execute certain work. That also is a contract. Now, when somebody is investing in a company, there is a that is why you will see there is another word is agreement with this stock exchange when they get listed, because they have to perform certain things to have a valid listing in a stock exchange. Similarly, when somebody buys a share in a company, the company is legally bound to give certain things to that fellow. That is why he is buying. So there is a tacit contract, you can say. It is not exactly like delivering goods or executing a work for that fellow, but like it's like owning a land or something like that. Some rights you get through that, but owning a land, it doesn't come under contract act. I'm just saying you have some rights because you have purchased certain things. The company is obligated to give you certain things back. So that is why contract act also in some part of the contract act also ensures that the shareholder gets his rights. Then memorandum of association of that company, article of association of that company. How does it treat the shareholders? Certain things they will be writing in that. Memorandum of association is, what does it mean? What does it say then? Rather, what the company is intending to do. Why are they coming together? Memorandum of association. Association means an association is being formed to perform certain things. So what are those things? What they want to do? The objective, the purpose for which the company is being formed. That is written in memorandum of association. Article of association. How is this association going to function? The way the association is going to function. So here, in these memorandum of association and article of association, some rights of the shareholder is given, because the shareholder is part of that association. He is when somebody is investing in a company, buying equity share of that company, he is part of that association which is forming that company. So these two documents also give rights to a shareholder. Now we have read about rights. Let us read about duties. What the shareholders should do. There are also responsibility and duties of shareholder which they should perform. These are shareholders should participate in general body meetings so that they can see and also can advise on the matters which they feel is not going good. It's like, we have all adults of 18 years of age has the rights to vote, but many of us do not vote. But we also worry and grieve about the way the government is performing. Unless you vote, how can you control government? So everywhere it should be like, we should exercise our rights, that voting rights, to the extent possible, so that you indirectly or directly influence the governance. Number of people, I think you must have also heard that wherever there is a change in government in a state or in a country, the voting percentage goes up. More people turn out, and that also by the poll analysts, it is also taken as an indication that there is a possibility for change. When people want to continue, many do not come out and vote. But when people want to change, they are desperate, so they go out and vote. So similarly, every shareholder should attend a meeting and vote. But generally, the equity shareholders who have bought shares from the equity market. Generally, I do not participate in such meetings, which is not correct. Shareholders should consult on all matters of finance and other topics. They can discuss among themselves on company's finance and other topics, and they should be involved in the decision making when AGM is there. They should raise questions. These are all easier said and done, but there is a way people should do. People do, and I have seen serious shareholders, they always participate, they raise issues. Shareholders should be in touch with other members of the company so that they can see the work progress of the company. This will help long-term shareholder value. And then mismatch between owners and management objectives. This also they can overview, or they can oversee and ensure that the things are going in a better way. Then agency cost. This is the cost paid to the directors and other officials. So they can always keep an eye on these 3 points to control the finance of the company. Now, with this, next is institutions in corporate governance. We have read about agents in corporate governance. There are 3 agents: board of directors, auditors, and shareholders. Now we are reading institutions in corporate governance. So first institution which affects corporate governance is Ministry of Company Affairs. The Companies Act of 2013 has provisions concerning independent directors, board constitution, general meetings, board processes, related party transactions, audit committee, etc. So this Companies Act 2013 or even 1956 were very elaborate acts, and they cover most of the part of governance of a company. So that is the first and foremost guiding thing for any Indian corporation, and that is handled by Ministry of Company Affairs. Ministry of Company Affairs can also intervene whenever required to set right things. There have been instances like when the wrongdoings in the company have been found. Ministry of Company Affairs can intervene, take over the board, appoint another board or a committee so that the whole thing is set right. In recent times, Yes Bank case, if anyone is aware, where the Rana Kapoor and all, they were holding shares and all that, it was found out that they have been doing a lot of wrong financial transactions. The Rana Kapoor's family was getting benefited. So all that was, when that was found out, Minister of Corporate Affairs dismissed the board, took over the management of that. They appointed another board, and the Rana Kapoor was put into jail. He was dismissed, and the new board was formed, and the Yes Bank the working of Yes Bank is now improving. In case of Satyam, when it was found that the balance sheets and profit and loss account had been false, the board was again overruled. At that time, Mr. Parekh of SDFC Bank, owner of SDFC Bank and SDFC, was appointed as a board member. He was, I think, chairman of that board. They appointed by MCA, and they oversee the procedure through which Mahindra Tech took over Satyam Computers. So Ministry of Company Affairs do intervene, and they have tremendous power in that regard. But generally, they will not come into picture when the company is doing well. In case of that, when this Adani case was raised by oppositions, there was also issues which were, Ministry of Corporate Affairs was also involved in replying and even defending things in Supreme Court, because they are a party in a way of functioning sub-company in India. The next is Securities and Exchange Board of India. It has set some guidelines, and that guidelines ensures protection of investors and have mandated the companies to adhere to the best practices mentioned in the guidelines. So, and SEBI is very powerful in India. SEBI is very powerful and have been doing good things till now. And there have been very good chairmen of SEBI who have done tremendous work on ensuring proper operations of stock exchanges in India. The present, there is a lady who is the chairman of SEBI. She may not be as effective, it seems, but again, SEBI as an institution has been doing good services till now. Next is ICAI, Institute of Chartered Accountants of India. How are they involved in maintaining corporate governance? Any idea? They are the one who decide about the accounting standards in India. They are the one who give details of accounting standards in India, and they give procedure and do how to do audit. Everything is defined by ICAI because chartered accountants are auditors and it is their controlling body. Any chartered accountant who is found doing wrong things can be debarred from practice by ICAI. And ICAI, along with Ministry of Corporate Affairs, can formulate the accounting standards. From time to time, they can bring in new things and ensure better compliance of financial statements. Next are the stock exchange. In addition to SEBI, the stock exchange also has power. Whenever there is a standard listing agreement, LODR, stock exchange with the stock exchange, that is between the company and the stock exchange. So the stock exchange can also take action against a company which is listed. For non-listing companies, SEBI can have effect, but for listed companies whose shares are being traded in BSE and NSE, then these people are answerable to BSE and NSE also for any illegal practices. So there also and every day BSE and NSE, they can stop trading of shares of any particular company depending on the market situation or performance of that company. When they generally do every day also, they can do something. There is a upper circuit limit, lower circuit limit. There are so many things, so many technical things are there, which I am also not very familiar with. But they can stop trading on a particular share if they find that there is something irregularities or unnatural things are going on in a particular share. So SEBI, BSE and NSE have also tremendous power, and they are in a position to control the trading of particular share. Last is ICSI, Institute of Company Secretaries. Because as I have said, company secretaries in a company are the record keeper or the front end managers who comply with company's requirement, statutory requirements with the MCA and the SEBI, etc. and etc. They are the one, company secretary are the one who issue or who coordinate the issue of shares and all that. So suppose someone buys a share, the share has to be transferred into the name of the other person from one person to another. That is the duty of the company secretary. So company secretariat also has large responsibility towards maintaining a proper list of shareholders of that company. Actually, when in the annual report, and there are also SEBI, as per SEBI, BSE and NSE guideline for listed companies, suppose a big investor comes and buys a certain amount of shares through some mutual negotiation discussion, all that has to be approved and done in the knowledge of BSE and NSE. Now, in all that is the responsibility of a company secretary to do that. In addition to the duties like meetings of board of directors, general meetings, and any other meeting of the committees, meeting of the subcommittees, keeping their record, circulating the agenda, ensuring that the directors are participating, ensuring that the auditors have been informed, filing the returns with the company's ROC, the regional registrar of companies of that particular location, that whatever requirement, statutory requirement is there, all that is part of company secretary. Nowadays, issue of share, after somebody gives money to the company, there is a particular rule. Initially, there were earlier, no, you can do anything, and it was really not very strict. But nowadays in Companies Act 2013, the procedure for issuing share certificate to someone who has given loan or invested money, there is a particular time period. There is, if you don't do, the company secretary can be liable to be punishment of, or his or her license of doing company secretaryship can also be stopped. He can be fined. The company can be fined, and so it's a very meticulous job a company secretary has to do, and all that is also, the ICSI, they also find when I formulate a guideline that the company secretary should do these things, because sometimes the law may not be very clear. So while implementing that, what should be done? So they will sit down and they will analyze the act, and they will advise. They will issue advisory guidelines for the individual company secretary to operate. So they are also a custodian of corporate governance in India. Some other possible institutions of corporate governance in India we are talking. Market. Any market. Market means the firm's product market or the capital market, where shares are traded, or even where capital market is also the market where you can take loan to expand or to do business. And the labor market. All three markets can influence governance of a company. Suppose people stop buying product of a company because it is not adhering to environmental standard, then the company will go into loss. So that way, the buyers can ensure that the company maintains environmental standards. I don't know if you are aware, but organic products, there is a demand for organic things. And they can be sold at a higher price as compared to a normal product. So a tag of organic can give you more return. But then if suppose a company is not doing anything organic, is not following the real norms for organic growth or organic farming or whatever, and then selling it, if the buyers know that and they stop doing preferring those items, then also there is an issue. So these buyers can influence the company to adhere to corporate governance norms. Similarly, the capital market, people will only lend to those people who are good in returning the money, who follow the rules and regulations everywhere. Suppose you are not filing your profit and loss, your balance sheets and all are not good. You are not filing returns in time. On the ground, you are not maintaining a proper environmental protections. You are not adhering to norms. You are not treating your employees in a proper way. Then the capital market will never give you good loans, because these are all indications where that the company may fail and the money lended to that company will also not return back. So if you know that, before giving loans, the financial institutions do come and visit the company. They do some due diligence before extending the loan. They meet people, they see the papers, but they also visit. Now, if you are a company, well-governed company, you are a disciplined company, you have a system to follow, then it will be easier for you to raise a market, because a company which follows a particular system over a period of time also builds its reputation as a good company, and that helps in attracting capital market. Similarly, if you are complying with all the necessary requirements of these stock exchanges, SEBI, government requirements and all, then people will find that they can show interest in buying your shares in the secondary market. That will also push up your capitalization. That is another good thing for a company which is following corporate governance. And if you are a well-governed company, you will attract employees. Every year you see in India, there are some surveys like good employer and all that. A company which is voted as a good employer always has a chance of attracting better talent. So corporate governance can be influenced by the markets. And that, because, if you can control the market or influence the market, then there is a possibility that it will also grow. So a market is a indirect controller of governance in a company. So they can influence the corporate governance mechanism in a company. Next is information distribution and gatekeeping. The gatekeepers are those not directly connected to the firm, but can verify or sometimes warrant the information about the firm. They are the lawyers, accountants, securities analysts, underwriters, and outside directors. You must have known that there are many financial analysts located in Bombay, Ahmedabad, and other big places, whose only business is to analyze the performance of companies. They do freelancing on this, they get information, and there are few people, there are known analysts who are also reporters in or they write columns in the financial papers or in magazines, who are doing research to make people aware how the company is operating. And there are in Mumbai and all, there are people who can really advise you on even investment, and they are investment advisors. These people can also be called as gatekeepers because they can influence the opinion of the investors. And once they influence the opinion of the investor, then you will get investors. So these are all freelancers. But then there can be other people like underwriters. Underwriters are the one who underwrite the IPO issue or certain debenture issue or something. If they are impressed by your record, if the name of a particular underwriter will always help to gain investors' confidence. Independent director or outside directors, they can also spread the opinion of the company through if they find that the company is operating well. So they are also one source who can influence the corporate governance. Board of directors, we have already ensured, but board of directors in a collective way can influence corporate governance. Next point in your course is investors' problem and protection. What are the provisions of protections for any problem of the investors? Okay. Now we have talked about rights and responsibilities of shareholders who are investors, but there are also other investors like a person who is holding a debenture. Debenture is something like a bond where some money is given, but it is not lieu of share. It is only a loan, an indirect loan. A debenture is a type of debt instrument that is not backed by any collateral and are backed only by the creditworthiness of the reputation of the issuer. Collateral means there is no security involved for that debenture. The company doesn't perform well, there is a possibility that the money you have deposited in debenture will go waste. You will not get any return. So there is a problem of the investor and how it can be protected by law. Some debentures can convert to equity shares while others cannot. Non-convertible and convertible debentures. There are companies who issue convertible debentures. There are companies who issue non-convertible debentures. A convertible debenture can be the debenture for some period when the company is growing or investing or expanding or coming up. So they will pay you some interest during that time. After the company starts operation, these shares are listed in the market, then you will be issued shares so that, depending on the performance of the company, the share value will go up and at that time, you will only receive a dividend, you will not receive any interest. But if the company is doing well, then you may earn more than the interest they have promised earlier. So some companies do that. When MRPL, Mangalore Refinery Private Limited, when they started, which is now a subsidiary of ONGC, they issued this. SR Oil, also one company which is also has been taken over by Rosneft. They also issued this convertible debenture. Initially for 2, 3, 4 years, you will be paid interest on the amount you have invested. After that, subsequently, they will be converting into shares over a period of time. But there are also non-convertible debentures, NCDs. And that NCDs can be time-bound, can be perpetual, for longer. And in some cases, such debentures can also be traded. Traded in the sense, in some cases, you can close it and get out, or you can transfer it to some other person. But this trading of debenture in stock market, you will not find. But that's a very rare thing. Rights of investor as a debenture holder. to receive interest on redemption of debentures in due time, to receive a copy of the trust deed on request, to apply for winding up the company if the company fails to pay its debts, to approach the debenture trustee with a grievance. There is a body of debenture trustee who can address your grievances. What are the mechanisms for investors' grievances? The general grievances of the investor have against companies can be listed as under: furnishing inadequate information on making misrepresentation in prospectus, application form, advertisements, and rights offer documents, delay non-receipt of refund orders, allotment letters, and share certificates, debenture certificate, bonds, delay non-receipt of share certificate, debenture certificate after transfer, delay in listing of securities with stock exchange, delay in non-receipt of share certificate, and all that. So these can be, and what is the, there are many. There are delay in non-receipt of certificates, delay in non-receipt of letter of offer of rights issue, delay non-receipt of bonus shares, delay non-receipt of notices for meetings, annual reports, fixing unduly high premium premium on shares, difficulties sending odd lots, obtaining. These odd lots issues have been mostly solved now. Earlier, when before dematerialization, things were difficult, but nowadays you can sell any amount of share. Obtaining undue benefits by company insiders, delay default in payment of interest on repayment of deposits. Now, how can you get redressal for your problems? Complaints can be lodged with the register of companies, stock exchanges, or SEBI, as the case may be, for each of the above grievances. In certain cases, they can be pursued with company law board also to obtain remedies and relief. Generally, ROC, SEBI can help you in redressing your grievances. But in some cases, you can also approach CLB. Investor information centers have been set up in every recognized stock exchange, which take up all complaints regarding the trades and members of the exchange. Moreover, two other avenues are also available to investors to seek redressal of their complaints. Complaints with Consumer Dispute Redressal Forum. Here, if you have deposited money, you can also approach a consumer forum for quick resolution. And you can go to court of law also. Considering the cost and time involved, the investors should better off for these methods only as a last resort, after exhausting other simpler and direct methods of redressal of their grievances. SEBI has issued rules, regulations, and guidelines to monitor the working of various players, both in primary market and secondary market, including stock exchange and mutual funds. In particular, SEBI guidelines provide for due diligence to be carried out by each intermediary in the performance of his work. SEBI also has scores. This is another online app which is available where you can register your complaint. You can download scores in your mobile, and if you have shares or other complaint even for debenture holders and all, you can register your complaint. They will give you a feedback. They will take up with the company for redressal of that. Role of company secretaries. Pursuant to Section 383A of the Companies Act 1956, companies with a paid-up share capital of 5 crore or more are legally obliged to appoint a whole-time company secretary who must be a member of the Institute of Company Secretaries of India. Now, similarly, as we talk of auditors who should be a member of ICAI, a company secretary has to be a member of ICSI. And paid-up share capital of 5 crore. It means whatever may be the registered share capital, if the company has got investment of 5 crore, then they have to appoint a whole-time company secretary. Every company having a paid-up share capital of 10 lakhs or more, but less than 5 crore, is required to engage the services of a secretary in whole-time practice for issue of compliance certificates. Now, for any other company, you have to have a practicing company secretary who is a whole-time practicing company secretary to certify or to help you in compliance. Now, what is a whole-time practice? What can be whole-time practice?
No idea, sir.
No idea. See, some company secretaries are working in a company, like any company with paid up share capital of 5 crore have to have a full-time company secretary, whole-time company secretary. Now, a company secretary who is working in a company as a whole-time company secretary cannot be a company secretary for any other company. And a company who is a company secretary who is only working as a private company secretary. He has a firm, he can be a company secretary to many companies. There are freelancer company secretaries. They are not company secretary to any big company. They do not do. But if you are appointed or you are involved in any one company, you cannot represent other companies. Okay, so that is whole-time practice. A private practicing doctor, something like that. A doctor who is in government service is debarred from private practice, but they do. That is another issue. But in company secretary, they cannot do. But a doctor who is only doing private practice is a doctor available to all. So that is what is whole-time practice. So the company secretary, in Bhubaneswar, there are few whole-time practicing company secretary I have known, and you can approach them for any general work. They can represent many companies. There is no limit, because they also do a firm like a chartered accountant firm where 2-3 people come as partner and work. So in this also they can have 1 or 2 partners and can take many companies. They also can appoint company secretaries with them in their firm. They can work with that. Then they are also company secretaries completing their course, also join there as trainee, take training, and these things can work out. So as per rule, any company which is a less than which has a share capital, paid up share capital of 5 crore has to have a company full-time company secretary, and others are supposed to have a company secretary, but he can be a full-time practicing company secretary, may not be appointed by them. So he can work part-time for each company. CS company secretary is a vital link between the company and its board of directors, shareholders, government and regulatory authorities, and all other stakeholders. Company secretary ensures that board procedures are followed and regularly reviewed, and provides guidance to chairman and other directors on their responsibilities under various laws. Commands high position in the value chain and acts conscience seeker of the company. I don't know if you are aware, company secretaries of big companies like Tata, ITC, even the groups of Tata Group, ITC, Tata Steel, and the Mahindra, L&T, or even Adani, Vedanta, and all. They are very important people, and they command a lot of respect. They are very close to the chairman. They are a managing director. They are close to all the directors. They draw really high salary. They draw equivalent to many directors. They are very well paid, and they are very influential, because most of the directors, even the promoters, may not be aware of the rules and regulations of the law of the country. So there the role of company secretary is there. It is like a highly paid legal advisor, something like that. Big lawyers in Supreme Court, they charge for half an hour, 1 hour, they charge in lakhs. So similarly, a company secretary also gets paid in crores, depending on the company. But he is one of the fulcrum of a company, through where all these corporate governance things are handled. Corporate governance and other stakeholders. In the course of its operation, a firm needs coordination between many groups of people: the owner, the managers, the workers, the suppliers, the creditors, the customers, the competitors, the government, and even the society at large. These group of people are sometimes called stakeholders, or are stakeholders, because in various ways they have a stake in the operation of the firm. The stake of owners, managers, workers, and suppliers are easy to see. The owner gets a share of the profit, the manager gets salary, the workers get wages, and suppliers get paid for their inputs in the firm. But the customers are also stakeholders, because they want to get good quality products at reasonable price. The creditors are stakeholders because the health of the firm determines whether their loans will be repaid. The competitors are stakeholders because they want fair competition in the marketplace. The government is a stakeholder because it wants the firm to declare true earnings and pay appropriate tax. Sometimes the action of firm benefits some stakeholder but hurts others. A proper balance has to be struck between these gains and losses. So that is the main background on which corporate governance should work on. That is, good corporate governance requires that a firm A pursue its goals efficiently and at the same time take into account the harm that it is causing to some stakeholders and try to ensure that losers are adequately compensated. Now, this can be part of, in the module 5, I think we will read CSR. Why CSR has become so important in any developed or developing countries? Because, any business which is being done directly or indirectly has negative impact on the environment and on the even you can say negative or positive impact on the some negative impact on even the society and the way people live around that place. Environment as it is, suppose somebody is engaged in mining, whatever measures they may take for sustainability or for repair and maintenance of the environment and all, but everything said and done, the environment will get affected at the end maybe in a reversible way or in a irreversible way. Now, suppose an industry is coming, which was in an area which was predominantly agricultural in nature. No doubt that the lifestyle of the people will change. Their GDP may grow, but their culture will get hampered. It has been seen that wherever business has changed or the nature of business has changed, people are affected in a way. So that is why, companies are required to go beyond profit motives and look into every aspect they are affecting indirectly or directly. A chemical dye manufacturer may be producing polluting waste, which will have to be disposed in a nearby river, affecting the lives of those who live in the banks of the river. The latter are not employed by the firm, but by the products of the firm. Yet they are affected by its operation and hence become stakeholders. So whatever you are doing, now suppose there is a village and there is a plant coming beyond that, or some big business. Even you take into example that somebody is setting up a mandap or a venue for even holding functions. It was a normal place in a village. It was an open ground in a village. Now suppose that some function starts happening there. Then what happens? Then I'm giving very mundane example, but that is how any commercial activities can influence. There will be issues of parking, many people will be coming, there will be sound, there will be light, then there will be even generation of waste. So many things will be happening. So I don't know if you go to village, various villages, earlier when there was this thermocol, now also if you thermocol cups and all that, plates and buckets, not buckets, it's like gina. So all that, the containers, small containers. If you dahi vada aludam, if you go to any, I have seen in many places, there will be land which is predominantly agricultural land, but gote chokka thibo joti bus for or thibo seti loko asanti. So a dahi vada aludam people, if he brings in and sells there and he doesn't take care of disposing that waste properly, then those thermocol cups and plates, and they can be lying everywhere, and you have lots of problems. A cha dokan pakre plastic cups agru thila. So all these are really impact which have smaller impacts, and bigger industry have bigger impacts. So that is why they have to be very responsible and they have to follow corporate governance. Good corporate governance demands that the firm take account of the effects of its actions on these people, perhaps by treating the waste before it is discharged into the river, perhaps by paying a tax on its waste discharge, which can be used to mitigate the health hazards posted by its operation. Actually, in companies, in countries developed countries where various industries were operating before with profit and all have all been closed because of environmental reasons. There are examples of alumina making business, Europe, America, they were leading alumina producers. Alumina is the ingredient to make aluminum. And alumina is made from bauxite. Bauxite was available in many places in Europe. They were even importing it and making things. But after certain things, the disposal of red mud becomes a big issue. So they have started understanding that, and they have stopped producing alumina rather than going out to countries like India, in Africa, where bauxite is available, and putting up a alumina refinery there and importing the alumina back to their country. So certain part of the waste management they can do. There are countries in Europe who are disposing the red mud into the sea. That was causing tremendous harm for the aquatic culture. So there also government came in and things have been now stopped. Next is banks and corporate governance. This is the last point in module 3 of your course. Why we need corporate governance in banks? Or why is it a special mention in your course? Because they are only dealing with finance. They are dealing with your money. Somebody who has invested in a share has invested some surplus amount. It is generally, it is not that you take loan and invest, but you are making a house, you are taking a loan, and you are putting your money in banks, you are keeping there. So if a bank fails, then the economy is hurt in a very big way. The economy gets irreparably damaged. So it has been learned over a period of time that banks are the most, should essentially follow corporate governance in the best possible way, so that at least your money doesn't get lost. You have seen there are many small banks in India who have gone wrong. People have suffered irreparable damage. Because they were smaller banks, the economy didn't get that hard. But otherwise, the people have suffered. But suppose you imagine a bank like SBI collapsing, then half of India will collapse. Even Chanda Kochar, who was chairman of ICICI, she had to go to jail because of irregularities where in some financing of Videocon, where her husband has some interest in now. So she was removed from that. Otherwise, had that practice been allowed, I'm not saying that what she has done is bad or good, but I'm saying certain practices, if it can ruin a bank, then the economy will have tremendous impact. Effective corporate governance is critical to the proper functioning of banking sector and the economy as a whole. Banks perform a crucial role in the economy by intermediating funds from savers and depositors to activities that support enterprise and help drive economic growth. Bank safety and soundness are key to financial stability, and the manner in which they conduct their business, therefore, is central to economic health. Governance weakness at banks that play a significant role in financial system can result in transmission of problems across the banking sector and the economy as a whole. I hope you people are aware about what happened in Nirav Modi case in PNB. PNB lost certain amount because some of the employees did not adhere to proper guidelines which are laid down while giving extra loans and all. So because of the irresponsibilities of certain employees or even the management, you can say some 1,000 crores were lost. And whose money is that? That is public money. So we as a country are poorer by that amount, and Nirav Modi got richer by that. The primary objective of corporate governance should be safeguarding stakeholders' interest in conformity with the public interest on a sustainable basis. Among stakeholders, particularly with respect to retail banks, shareholders' interest would be secondary to depositors' interest. When in a bank, shareholder has the shareholders' interests are secondary to the person who have deposited their money in the bank. So depositors' interest has to be paid before you are giving anything to the shareholder. You have to guide, you have to protect that. There is a Basel Committee guideline for following, is followed for banks or for CG. And Basel Committee was formed in 1974 by BIS. BIS is the Bank of International Settlements, which is formed by some 64 central committees. And Basel Committee came up in 1974 in the aftermath of the failure of Bankhaus Head Start in West Germany. It was a big bank in West Germany, and that failed because of improper corporate governance practices. Not lack of governance caused that bank to fail, and it had tremendous impact on the bank in the economy of Germany. You have seen in the corporate governance structure of Germany that bank play a big role in financing, or they are the shareholders in every big corporations. So that bank collapsed because it didn't do properly or work properly. This Basel Committee is headquartered is in Basel. It was established to enhance financial stability by improving the quality of banking supervision worldwide. The committee's first meeting took place in February 1975, and meetings have been held regularly 3 or 4 times a year since. These guidelines are based on principles of corporate governance published by OECD. OECD is the first non-governmental body, is a voluntary body like ISO, who have given the guideline for corporate governance. Now, what is BIS? In the last slide, I am saying about that. Bank of International Settlement. This is established in 1930. The BIS is owned by 63 central banks. Who are central banks? Anyone is aware? Can you give an example of a central bank?
RBI.
Yes.
Reserve Bank of India.
Reserve Bank of India, like all the central banks of government, 63 countries, they are member of BIS. Now, in any country, if the banks are not member of these BIS, or they are not coming under BIS, then it is very difficult to do transaction with those banks. In that case, what they do with those in local banks, what they do, they tie up with a foreign bank who is under BIS. And these foreign banks underwrite or give guarantee for transaction with that bank, but under a specific, they take collateral or do whatever. There are countries in Southeast Asia where none of the banks are recognized by Indian banks. India is part of that BIS, but you will not be able to transact with those countries unless they have a backing up of some other Europe or American bank. So while doing transaction for foreign countries through banks, certain foreign countries through banks is very difficult because they are not part of it. These 63 central banks account for about 95% of world GDP. Its head office is in Basel, Switzerland, and it has 2 representative offices in Hong Kong and Mexico City. The Basel Committee on Banking Supervision is the primary global standard setters for regulations of banks and provides a forum for regular cooperation on banking supervisory matters. It's 45 members. The Basel Committee has 45 members comprising of central bank and bank supervisors. Earlier it started with 10. Now the number has gone up. With this, we have finished module 3, and next class, I think tomorrow, 3 and 4 we have. So we'll finish the module 4 by that. And then whatever next 1 or 2 classes we have, we'll finish module 5.
Sorry, sir, disturbing us, sir. Please share the notes, sir. Please, sir.
I will send. I will talk to Rasmi madam. Actually, Monday I can talk to her and send through her. Okay.
Okay, sir. Okay. Thank you, sir. Thank you.
You can contact even Rasmi madam. I don't know. Last time also I have given. If she has, she can share, or I will again send. There is no issue. I will talk to her. You can also ask her.
Okay, sir.
Anything you want to, any other question? 1 or 2 minutes we can take then. Okay. DDC ରୁ କେହି ଅଛନ୍ତି ନାହିଁ? ସାର୍ ଆସିଲେଣି?
ସାର୍ ଆସିଲେଣି ସାର୍।
ହଉ ତାହେଲେ ମୁଁ ଛାଡୁଛି, ରହିଲି।
ଆଜ୍ଞା।